Hey guys, it is Julie here with JT.Wealth. In today's video, we are discussing things to keep your eye on in the stock market for this week ahead. So let's get into it. Alright guys, welcome back and thank you so much for being here. Like I said, today we are chatting about a few different things to keep your eye on in the stock market this week. This is going to include some updates on IPOs, some vaccine news, plus what hot SPACs to keep your eye on. Right before we jump into all of that, this is just your friendly reminder that if you enjoyed today's video, make sure you give us a big thumbs up and that you leave your thoughts in the comments down below. Also, if you like free stocks, make sure to check out some of the links in our description. Right now, Webull is giving away 4 free stocks just for signing up and funding your new investment account, so make sure to check them out. Okay, now first up, we have a couple updates to the 2 highly anticipated IPOs this week, and that is for Airbnb and DoorDash. Now, last week we did do a video covering these 2 upcoming IPOs, and at that time, Airbnb had a price target for their shares of $44 to $50. But Airbnb has now raised the pricing range for their IPO to be between $56 and $60 per share, as per an SEC filing. So this increased range means that Airbnb could raise as much as $3 billion during its stock market debut, which is expected on December 10th. This would also put their valuation as much as $42 billion. And we've seen a similar increase by DoorDash for their expected initial pricing, as they will be targeting to raise as much as $3.1 billion, which is up from their previous high-end goal of $2.8 billion. So it will be marketing 33 million shares between $90 to $95 a piece, which was up from the previous range of $75 to $85 per share. At this high end, it suggests that DoorDash will have a fully diluted valuation of more than $35 billion. DoorDash's IPO is slated for December 8th, with trading on the New York Stock Exchange expected to begin the next day on December 9th. And of course, if you are curious which of these 2 IPOs might be the better buy, make sure to check out our video where we discuss just that. Now, in vaccine news, these last few weeks we've seen the hopes of a vaccine help boost equity markets as everyone can finally see the light at the end of the tunnel for life getting a bit more back to normal. Now, this week we have an important date which represents another milestone in the path to getting this vaccine approved. Now, Pfizer and their German partner BioNTech in late November became the first to file for emergency use authorization, or EUA, with the FDA after finding their vaccine was 95% effective in preventing the virus. By going through an EUA, the drug makers have been able to bypass the typical months-long process to receive FDA clearance given the dire pandemic situation. Now, over the past couple weeks, FDA staff members have pored over clinical data from the drug maker's trial. The agency said on November 20th, the same day that Pfizer announced its intent to file for an EAU, that it would convene a meeting of its outside scientific advisory board, the Vaccines and Related Biological Products Advisory Committee, on December 10th. The VRBPAC will review the data and then will vote as soon as that day on whether or not to recommend that the FDA authorize the vaccine. Though the recommendation is non-binding, the FDA does typically honor the outcome of these votes. General Gustav Perna, head of the nation's Operation Warp Speed, who intended to expedite the process of distributing the vaccine, has said he believes the vaccine will begin being distributed to states 24 hours after the FDA grants authorization. Now, as we know, Pfizer's vaccine was approved in the UK, and Britain is now distributing this vaccine amongst its residents. Moderna has also filed for an EUA and is second in line to Pfizer for their vaccine's review. So just positive updates there for the stock market and mankind alike. Okay, now on to SPACs, and I want to start off by highlighting something that happened with one SPAC last week before getting in what ones you should keep an eye on this week. And that is CIIG Merger Corp, who trades under the ticker CIIC. As you can see here, they had a pretty substantial jump on Friday, going up about 35%. Now, since then, we're up nearly 50%, up above $31 per share. So we discussed this SPAC back on November 19th, and at the time, these shares had just jumped up to $16.64. So fast forward to today, and you'd be up about 90% on that investment. And the reason I want to highlight this is just to show the pieces of news that can make some of these SPAC companies suddenly take these big leaps. And in the case of Arrival and the CIIC stock, what sent it soaring this time was simply TV analyst Jim Cramer saying that he thinks this electric vehicle maker is set to be the next Tesla. So on the note of exciting news causing one of these SPACs to jump, we're going to take a look at a few others that have had or have exciting catalysts coming up in the near future. Starting things off with Landcadia Holdings. Currently under the ticker LCA, their stock was dipping on a handful of rumors, but it is soaring back up again as the SPAC company could soon be completing its reverse merger with Golden Nugget Online Gaming. So we have learned that Landcadia Holdings is hosting a special shareholder meeting on December 18th this year. There, it will lead a vote to approve the proposed business merger with Golden Nugget Online Gaming, and if all goes well, Golden Nugget will soon hit the NASDAQ exchange and start trading under the ticker GNOG. So for many online gaming bulls, this will be a dream come true. Now, Landcadia Holdings and Golden Nugget together are about to bring a company in a red-hot market to Wall Street. How hot? Well, one report suggests the online gambling market will be worth more than $127 billion by 2027, representing a compound annual growth rate of 11%. Fueled by the pandemic and stay-at-home trends, online gambling is going to keep heating up. Since the confirmation of that shareholders meeting, we have seen the stock run up about 28%, but it certainly could still have room to run as we approach that December 18th date. The second SPAC that we're taking a look at is Pershing Square Taunting Holdings. Now, what makes these guys quite interesting is that they're seeing a decent run up and they haven't even identified a merger target yet. This special acquisition company, which trades under the ticker PSTH, continues to shoot up on nothing but speculation and admiration for its founder. And that founder is Bill Ackman. And Bill Ackman is legendary, known for his role as an activist investor. And he's not a stranger to the world of blank check companies. Back in 2011, he launched Justice Holdings as a blank check company, which then acquired the popular chain of Burger King. After the reverse merger, Ackman worked a deal with 3G Capital to combine Burger King and other popular brands under the Restaurant Brands International umbrella. With this backdrop, Ackman and Pershing Square Capital launched PSTH stock in July of 2020. When it came public, it was the largest ever SPAC because it raised $4 billion. Importantly, Ackman has said that PSTH is looking for a mature unicorn. According to the billionaire, up until now, these unicorns have not faced pressure to come public. Pershing Square thinks now is the right time to make a move. Now, like we said, they have not yet identified a target, although some rumors have included SpaceX, Palantir, which is now actually public, and Stripe. Now, the excitement around this SPAC is causing its stock to currently trade at $26.46. But this will be one to watch closely because upon announcement of their actual merger target, we could see this shoot up considerably more. Next is Northern Genesis Acquisition, who is merging with a company in the electric vehicle realm. And that is Lion Electric, a maker of medium and heavy-duty electric vehicles. So they are a Canadian-based maker of electric school buses. They were founded back in 2011 and originally focused on creating more typical buses. However, starting in 2017, the company rebranded itself to focus on EVs. So that deal will have Lion Electric trading on the New York Stock Exchange under the ticker LEV. It also places the pro forma implied market capitalization of the new company at $1.9 billion, and they're set to receive roughly $500 million in cash proceeds from the SPAC merger. The company plans to use those funds to further its growth, and that includes the creation of a U.S. vehicle manufacturing facility, continued development of advanced battery system, and the construction of a highly automated battery factory. So Lion Electric and Genesis are expecting the SPAC merger to close in the first quarter of 2021. Currently trading under the ticker NGA, they're just shy of $16 this morning, so still a lot of room to run before their merger closes. So those are just a few exciting SPACs to keep your eye on. Now, I know it has been the year of the SPAC, so there are many other exciting companies out there to watch as well. So make sure to leave your thoughts in the comments down below on what your favorite SPAC is right now. If you made it all the way to the end of today's video, make sure you give us a big thumbs up and that you're subscribed to the channel as well. Thank you guys so much for watching. I hope you have a great week and cheers.